Welcome to Reshair on ESPN 730. For the next hour, your host, Chris Reshaar, will bring fresh air to your financial needs. Excite, educate, and empower you to make sound financial decisions. Chris is a seasoned licensed mortgage consultant with NFM Lending. Originator license number 117266. Now, here's your host, Chris Reshaar.
Welcome to Reshair Radio. I'm your show host, Chris Reshaar with NFM Lending, licensed loan officer in North Carolina. My license number is 117266. And I want to just say as we start the show, it's been since last week since we aired, but everything is kind of a little bit different. So I've got a lot of stuff to share with you. Really excited about today's show. But if you've never listened to Reshair Radio, let me tell you a little bit about what we do here each week on Sunday mornings at 10 a.m. So Reshair Radio really was a concept that started about 2.5 years, maybe 3 years ago. Got approached by a company called the Real Estate Radio Network and said, we want to do a radio show in Charlotte focused around real estate, finance, mortgage, you name it. Chris, would you like to be a show host? And of course, here we are. So you know I was interested, right? But the goal of the show really is to excite, empower, and educate Charlotteans to make sound financial decisions. And we do that by bringing in expert contributors that are participants on my show on a monthly basis, bring in local guests that can talk about all different topics related to finances. And so that's what we do. The goal is to kind of help you make good decisions, and we do that with bringing in lots of local experts. So what I'd like to do before we sort of jump into our themes for the day is introduce our expert contributor, Sandy Sullivan with AXA Advisors. Sandy, welcome back.
Hi, Chris. It's good to be back.
That's right. So it's exciting to be broadcasting our show here today on Super Bowl Sunday.
Yes.
Wouldn't we rather be talking about football?
I would personally much rather talk about football, and I understand that you have a dog in the hunt this time.
Yes,
aren't you
do.
an Eagles fan?
I am an Eagles fan. I'm from the Philadelphia area and super, super excited. I know outside of maybe Dallas and New England, we've got most of the country rooting for the Eagles this year. I just happen to be rooting for them all year, even though I'm in Carolina, right? You know, of course, I don't want to dog on the Carolina Panthers. I think they're a great team, and it's fun to watch and participate. But you are actually one of the original Panthers fanatics.
Yes, I am. I'm a PSL owner. I'm currently protecting a perfect home game attendance record. So I've been to every home game.
That is unbelievable.
At Bank of America Stadium, going all the way back to when it was Ericsson Stadium.
Right.
For 20 years, I've been in my seat every Sunday that the Panthers have played.
Pretty cool.
Yeah, it's been fun. I really enjoy it. I'm always disappointed if they don't make it to the postseason.
Well, absolutely, yeah. So talented team. Hopefully they'll have another try next year, right?
We are coming back. Yes,
that's right. We're coming back. So anyway, we'll probably get back to Reshair Radio. I couldn't resist. It's Super Bowl Sunday. So anyway, so Sandy, we're going to kind of why don't you just kind of do the intro of who you are and what the company is. And then maybe we'll get into our topic of theme a little bit later on in the show.
Sure, Chris, I'd like to do that. Before I do my intro, though, wouldn't it be appropriate if I asked when you open the show?
This is the fun part, folks.
Chris, when you opened the show, you said something I'm not accustomed to hearing. You said you're here this morning and you're representing NFM Lending, and I understand that you've made a move and that you are representing a different company. Why don't you tell the listeners for a few minutes what's going on there?
Sure. So, well, I have to say, my 7 years at Movement Mortgage was just really full of blessings. My heart is still partially with that company because it really is just a great company. So, would never really be anything other but grateful for that opportunity. So, want to make sure that people at Movement Mortgage know that. But I have made a change. I'm with a smaller company called NFM Lending, and really the change was really more prompted by really just opportunities for growth in my career. Every mortgage company can offer some advantages and some disadvantages over another. And in this case, was just really looking for an opportunity to grow my career in a way that maybe wouldn't impact our listener or the realtor partners or builder partners that I work with. But this opportunity I'm working with, I'm still a licensed loan officer, still originating loans, doing what I do every day the best that I can. But I'm also opening local branches in our marketplace and hoping to bring this smaller company that's not really immersed in the Carolinas or in Charlotte at all, kind of bring them to the market, right? So it's kind of like opening my own coffee shop and competing against Starbucks, right? nobody's ever heard of my brand of coffee. In this case, nobody's heard of NFM Lending. That kind of excites me because it gives me an opportunity to kind of kick the door open and maybe make an impact and grow my career that way, and contribute and grow and develop people inside of the company.
So, Chris, I've known you a pretty long time, and I know that you are deliberate in your decision-making processes about your business and that you're very devoted to your career. What was the process that you went through to decide to make this change?
Well, it was an interesting process. I have a lot of friends in the local mortgage community, and any good manager like I've been over the years, you want to build your team and grow your team, and you call your friends and buddies and say, "Hey, look what we have over here. Come over here, and I can do this for you, or I can do that for you." And because every company's got different bells and whistles, but I knew that my career was probably a little more important to me than to make a decision based off of someone giving me a little more marketing dollars or paying me a little more dollars in compensation. So I actually worked with an executive recruiter who represented many companies that helped match me with a company that was a good fit for me. And so the process really started with me doing like a 1 hour to 2 hour phone interview with either the CEO or president or owner of a different mortgage company. We went through this process for about 2 weeks, and each day we talked with somebody different. And so it really, I use the analogy of almost like The Bachelor, right? You start out with 20 really cute women and you sort of narrow it down, and as each interview went, I kind of realized, that one just didn't stand out anymore. And some of them would just sort of naturally fall off the list because new ones came along and maybe stood out in that process. So it took a couple of months to go through the interview process. Then I narrowed it down to about 3 companies, went all over the country, went out to Phoenix, Dallas, went up to Baltimore. And once I kind of narrowed it down and figured out the top 3, then I spent time meeting and going and seeing and touching and smelling their operations facilities. So it was definitely an exploration process and narrowing down, and NFM Lending really, which we'll talk a little bit more here in a minute, just ended up being the ones that got the final rose. I actually sent the final rose to the gentleman that I was working with that helped bring me over there as a joke. I just said, "You got the final rose." I sent a long stem red rose as just kind of as a funny way to say, I've selected you, or you got me. Let's take the next step. So you gotta have fun in the process too, right?
Well, why don't you tell us a little bit about NFM then, and also, I know you well enough to know that you wouldn't have made a change if there weren't some differentiators.
Sure.
Yeah, why don't you share that with the audience?
Absolutely. So, like I said earlier, there are a lot of really great companies. There's no way I could actually humanly interview with every mortgage company in the country. There's just no way. There's too many. But NFM is really just a smaller company. We're looking to maybe $2 billion as a company in volume. Some of the other lenders that I've worked for in the past have been much bigger, 6 or 8 times bigger. And, there's only like 21 underwriters, and you can see them all in a room, in the same room, right? There's only so many processors. So when I was really getting to know NFM Lending, felt like a family environment. So it's a small company. It's been around for about 20 years. They're out of Baltimore. And, I could go through the list of accolades like best places to work and top purchase lender in the country and, best places, all kinds of different things like that. There's a lot of great mortgage companies to pick from. So they had a lot of those common accolades that we see with some of the other lenders in our local marketplace. So, but I was looking for a company that was maybe a little smaller where I could kind of get back to more of a personal touch. I've spent some time this last week in Baltimore just to go up there and get some training. And, I'm sitting with the company executives multiple days in a row. We're talking every single day. So just being able to tap into the local president and the CFO and the leaders, and they're helping me, bring some differentiators to the market as well. So I'll maybe answer that question next. So just small, really good company, sort of family environment, love the company. In terms of differentiators, there are some differentiators. I think at the end of the day, you can always find another lender that may offer a slightly lower rate somewhere. that's not really what I'm about. I want to offer a competitive rate to my client, but I also need to make sure that we can deliver good service, that we have proper communication systems and tools so the customer knows what's going on through their loan process. And then offering some creative marketing and strategies that can not only bolster my business personally, but help add value to the builders that I work with and the realtors that I work with. Because my seat is very multifaceted, right? My customer is the client that may call in on this show today and say, Chris, I may want to buy a home, I may want to refinance. But then my other customers are the realtor and the builder, right? And then I also have a team that I need to keep happy. So there's a lot of elements that you have to balance in terms of choosing differentiators. So just a few of them are inside our marketing tool system, we call it a database. When your customer comes in, they automatically drop into your database, and it can do all kinds of bells and whistles and emails and follow-ups and videos. It lets the customer know every step of the way. They get a personal video that says, here's where you're at in the home buying process. But more importantly, my market database I share with my realtor partner and my builder partner, and they can go in and we can do pipeline reviews. They can see all the loans that we're working together and even get loan updates by just checking in my portal. And they can even print their own pre-approval letters and pre-qualification letters. So when realtors are out showing homes on the weekend, they don't have to feel guilty stopping me on a Sunday morning when I'm worshiping in my church to say, I need a letter to get this offer in. Please jump through these hoops for me. The realtor can just log right into my portal. The customer's already been pre-approved. They just print the letter, they put the address on it, and they move about their business, putting their offer in. And I get notified that, guess what? My realtor partner just went and printed a pre-approval letter for the Smith family. So tools like that are innovative, video access, making the job easier on the realtor partner. Those were a few differentiators that stood out in terms of their ability to market. They also do a lot of the marketing for me. So instead of me having to go into Facebook or Instagram and post stuff that I create and try to get it approved, they literally will go in and through the marketing material and send out. Say, what do you want to send out? They manage it all for me. So things like that allow me to focus on what I do best, and that's helping people get loans and mortgages, not necessarily sitting in front of a marketing tool, trying to figure out what to send out this week. So lots of things like that. I have way, way more coming, but not all of it is market ready. So in subsequent shows, we'll follow up with that. But those are a few key differentiators. Super, super excited about this opportunity to be a part of the NFM team, and hopefully my realtor partners and our listeners, more importantly, will continue to support Reshair Radio and me inside of this new model.
Well, I can tell you're excited, and I'm excited for you.
Perfect. So this is probably a good time to kind of take a break, Sandy. So let me just remind our listeners real quick that if there's anything that you hear on today's show that is of interest to you and you want to get more information, you can reach out to me via text or just give me a call. My number is 704-277-4463. That's 704-277-4463. And of course, they can also reach out and say, I need Sandy, because Sandy's got some great stuff to share today. So I want to make sure our listeners are supporting Sandy with their financial planning needs. So please stay tuned. We'll be right back for another round of Reshair Radio. Hi, this is Chris Reshatar, host of Reshair Radio and loan officer with NFM Lending. Is home buying in your future? Buying a home is one of the most significant financial decisions you will make in your life. Each step in the process is important to ensure a smooth transaction. But the most important step, even before you look at houses or call a realtor, is to get pre-approved. A pre-approval is when a lender evaluates a loan applicant's eligibility for a home loan. The loan officer collects information such as their employment, income, assets, and current expenses. The lender then gives the applicant an idea as to whether or not they could afford a home loan or an approximate amount of loan they could qualify for. If you're looking for platinum level service and open communication through the loan process, call me, Chris Reshatar, at 704-277-4463. That is 704-277-4463. LO license number 117266, corporate license number 2893. Go to nfmlending.com for licensing information, or you can apply online today at themortgagegenius.com. Welcome back to Reshair Radio. I'm your show host, Chris Reshatar with NFM Lending. And we actually have a special guest, an expert contributor here, Sandy Solomon. If you didn't listen to our first segment, Sandy is actually a regular contributor to Reshair Radio, and he is an advisor with AXA Advisors. And Sandy, as we did our intro briefly earlier in our first segment, I want to make sure that you have an opportunity to wow the socks off of our listeners and tell them about your disclaimers, and maybe squeeze in there a little bit about who you are. But really, we're going to kind of jump into our message for today in terms of what our topic is. So
yeah, that sounds good.
Go ahead
Chris.
and get them wowed here. Start it out.
I appreciate that. I have some responsibilities to compliance. So before we get started, I think it's important for us to remind the listeners that the purpose of our time together is to educate and is not to provide specific investment, tax, or legal advice. All the examples are hypothetical. They are not a guarantee of investment performance. They are not an endorsement or promotion of any specific offer, a mutual fund investment, or financial product. The listeners should always be reminded to seek the advice of a financial professional, a tax advisor, or an attorney about their specific situation. I can be reached locally at the AXA Advisors office at 704-540-2962. And we offer securities and advice through AXA Advisors, LLC in New York, New York. The company phone number is 212-314-4600, and we are a member of FINRA, the SIPC, and we offer our products, our annuity and insurance and investment products, through AXA Network, LLC.
Wow, that was
So
great.
there you go.
Awesome.
Thank
Wake
you.
up, folks. Wake up, folks. I know it's Sunday morning, but we got to get that in. Absolutely get that in. So
They won't let me come on without it, Chris.
that's right. But we much rather have you on and have that in there. So, well, really, just briefly, tell me briefly about, so our listeners know what your role is at AXA Advisors.
Well, sure, Chris. I'm a financial professional here in the local area, so we deal with our clients in several areas: wealth creation, retirement planning. A lot of our clients are business owners, and so they come in with questions about employee benefit plans, business succession strategies. Anything that has to do with making a wise decision about some of your money is probably a topic that we are going to want to hear about in my office.
That's why you're on Reshair Radio. So perfect. So why don't you get us kicked off here with your message for today?
Well, sure. I had an idea for the show, Chris. I was recently listening to a podcast from one of my personal favorite financial authors, and he's an industry personality, an industry pundit, if you will. And his name is Ben Carlson, and Ben Carlson recently wrote a book called A Wealth of Common Sense. I love that title.
This is not the medical doctor that ran for president.
This is not. No, this is Ben Carlson, the financial author, the author of A
Not
Wealth
Ben
of
Carson,
Common
just
Sense.
making sure our listeners know.
That's right. So this book has turned out to be one of my personal favorites, and it's a book that I like to recommend to my friends and to our clients. And if Ben were here in the studio with us today, I would love to tell him that this is the book that I would have written had I somehow been capable of doing something like that. It's that good.
Somehow, okay.
Yeah, if I'd somehow been able to. That's right. So Ben talked about how often he gets requests from his readers and listeners and friends to talk about how he invests his own personal money, about how he goes about the process of investing his own personal money. And I think that's an important distinction, how you go about investing versus how you manage your investments. Okay, so more on that in a minute. Anyway, it started me thinking about how I might share with our listeners some of those same kinds of ideas. Maybe the folks at home would somehow like to get to know me better by hearing my story and by hearing about how I got started with my own financial plan, which, by the way, happened long before I ever became a professional financial advisor, and I think that's a real important part of my story. And then subsequently, how I became attracted to the industry as a career, or more importantly, a place to have my business.
Sure. Well, this is a great idea for the show. Love it.
Good.
Let's keep running, man.
Good. So why don't we go next to let me describe for the people at home a little bit about who I am today. Much of who I am today was shaped by, what I learned from my parents, especially from my dad. My grandparents, Chris, were children of the Great Depression, and I don't know if many of our listeners have heard those family stories from the Great Depression, but it was a time of scarcity in our country.
Yes.
And And that experience caused people to have, in some cases, a firmly held belief system that money would always be in short supply along with everything else. My grandfather on my mom's side was a country doctor, and he made house calls, and he was often paid in barter. Whatever might be on hand, like a chicken or a bushel of corn, could be his payment. Or, he might not have been paid at all as a country doctor. He had a horse-drawn carriage that he drove through the countryside. And by the way, the countryside back then is a community we now call Belmont, North Carolina.
Right. Wow.
So my great-grandfather
cool.
was a country doctor in Belmont. That's right. Yeah.
Wow.
So then anyway, after my father returned from Korea, he served in the Air Force, and he found a very good job. And in the early 60s, there was a post-war boom going on. And for quite a long while, my father's fortunes and the fortunes of our family were constantly on the rise. And one of the ways that you could see evidence of that prosperity was my dad moved up from a Pontiac up to an Oldsmobile.
Ooh.
Yes. And then up to a Cadillac.
Wow.
Yeah, I think you see where this is going.
Yep.
Yeah. My parents bought a beautiful brick ranch home with a 2-car garage in a lovely neighborhood, and everything was great. So, the rest of the story is that things were so great, in fact, that my dad seemed to forget what he had heard about scarcity and began to adopt the opposite kind of thinking from his parents, which was money was never in short supply, and things were always going to get better tomorrow, kind of a sunny days only concept and never any rainy days. And this went on for really a pretty long time, for years, in fact. And I'm thinking back on it now, and I think it's funny to remember that my father's first new Cadillac was a sky blue color. It was a 1966 model Cadillac, and it was the color of a cloudless blue sky, and I think that described his attitude in those days. And one thing my dad never figured on, the one thing that was to be his great setback turned out to be a drastic change in his health circumstances, and the problems associated with his health made it very difficult for him to keep that great job.
Wow. So what you're saying is you've learned these lessons from your dad really after he got sick as to what not really to do.
Yeah, my father's illness changed everything for my family, and I received, I think, some programming as a result of that, some mental programming, a shift in my perception. And all this was happening when I was just a kid, obviously. My parents tried very hard to keep up appearances, and it became obvious that things had changed with my family's financial circumstances. And I can't really remember as a boy hearing my parents say that we couldn't afford something. But then suddenly the talk of money became the most important thing, and really it was the talk of the lack of money, and it was something that we heard about constantly. I know it was very hard on my parents, and especially hard on my dad. As he grew older, he would later admit to me that he almost never made a good decision about how he handled his money, and that he had some real regrets that he had never learned the habit of saving.
Wow, that's big that he shared that with you. So how did that really affect you or sort of lead you in your career?
Well, it didn't lead me to a career in finance right away.
Okay.
That's not exactly what happened, but it did. It radically altered the way that I think about everything in relation to money. Rather than seeing the sky as always clear, I understood at a very early age that some things are just beyond our control in this life, and that it really pays to think of the future in terms of what might happen if everything goes according to plan, but also to think about what might happen if things are unexpected. Can you conceive of not just best case scenarios, but worst case scenarios?
Right.
And
so
that's what
you're really
financial
saying our
advisors-
listeners really should have a worst case scenario mindset or plan.
I think they need to have a duality in their mindset.
Okay.
And that duality should include a plan for what if everything goes well, but that plan should also address the issues that could arise if everything doesn't go well. So kind of a best and worst case strategy, if you know what I mean.
Absolutely. So how did that lead you to what you're doing today?
Well, that's a good question. If it's okay, I want to back up just a little teeny bit and talk
sure.
about the evolution because it came for me in a couple of phases. Most people that I've met seem to start to think financially, Chris, at a certain time in life, and usually it's because they've been triggered somehow. Most commonly, it's probably they got a really good first job after college, or maybe they got married and started having a family, started having their children. The first step, and I know you'll be happy to hear this in my experience, is that people usually start talking about buying a home.
Yep, that's
Yeah.
music to my ears.
Yeah, yes, it is. Yeah, it's the whole reason why we're here, Chris, because people want to buy houses and they want to create homes. And so that's what I did. In my mid-20s, I bought my first house. And it wasn't because I had knowledge of the future. It was a trusted older friend that I worked with that literally pushed me into this decision. And at the time, I wasn't either mature enough or smart enough to realize the importance of that decision. But it was a beginning for me financially, and it was kind of like an infant's first step. It was the right thing to do at the time, and I didn't realize even how important it was.
Well, we often talk about buying a home is really an investment here on the show.
Yes, for several important reasons, and we might segue back into that. The reason that I think it's important for me and for our clients is because owning a home forces you into the habit of saving.
It absolutely does.
Yeah, it's
Some don't even realize it, but it does.
I don't think they do. They didn't buy the house for that reason.
Right.
They bought the house because they wanted a home. But when you are tied to that mortgage payment, that's a forced savings. And although some of that mortgage payment every month goes to interest on that loan, some of it also goes to what we call equity in that home, which is wealth.
Inside, wealth
Yeah.
inside your home.
Yeah, and it's important to differentiate that home equity from rent because, rent never leads to any equity and it never leads to any wealth on your personal balance sheet.
Absolutely. So, well, this is a perfect time to jump in here and take a quick break. We're out of our time for this segment. But, Sandy, let's make sure we pick up on this in terms of how your story continues to move forward as we really roll into what drove you to be a financial planner and how you can help people. So hopefully you're really catching the vision of what Sandy's trying to communicate with us here this morning on the show. So we're going to take a quick break. So please stay tuned. We'll be right back. Hi, Chris Reshatar here with NFM Lending and host of Reshair Radio. If you are considering purchasing a home, you may wonder what your financing options are. We offer a variety of loan products to fit your situation, including conventional, FHA, VA, USDA, and jumbo loans. Here in the Carolinas, some of the most common loans are FHA and USDA. FHA loans are popular in low-income and first-time buyers due to their less stringent requirements. They also have low down payment requirements and tend to have a lower credit score requirement as well. USDA loans also allow low and moderate income households to purchase homes in an eligible rural area. Home buyers who do not qualify for a conventional loan may be able to purchase a home with USDA. If you're looking for platinum level service and open communication throughout the process, call me, Chris Reshatar, at 704-277-4463. That is 704-277-4463. LO NMLS license number 117266. Corporate NMLS license number 2893. Go to nfmlending.com for licensing information, and you can apply online at themortgagegenius.com. Welcome back to Reshair Radio. I'm your show host, Chris Reshatar with NFM Lending, licensed loan officer in North Carolina, license number 117266. And if you have not been listening to our show, we've got Sandy Solomon with Axe Advisors here. He is an expert contributor. And Sandy's really just been, Sandy, you've been really kind of telling us your story in terms of what process you've sort of followed to naturally fall into the career that you've chosen and maybe even how some of those steps that you've learned along the way are going to convert to helping your clients, our listeners, et cetera. So you were just talking really before the break, we were talking a little bit about you kind of your first natural step to starting that path of creating wealth on your own was really buying your first home, which for many people, that sometimes it is their biggest way to invest in their lifetime is that home ownership piece. So why don't you kind of pick us up from there and finish telling your story?
And I don't want to date myself to the audience, Chris, too much, but
you can't help it, man.
That's right. Yeah, you'll appreciate this, I'm sure. When I purchased my first home in Charlotte, it was in the very early 80s. And
we've moved on from the buggy story.
Yes, we have. Yes, there were no buggies involved. But you'll appreciate this as a mortgage officer. Interest rates at the time on home loans were around 12 or 13%.
Wow. Now, I'm not allowed to say interest rates on the air, but you can.
Yes, well, and those were rates a long time ago. But I will tell you one thing I learned is you can't buy nearly as good a house when rates are 13% as you can when they're lower like they are now.
Yeah, that's crazy. And our clients today fuss over a rate that's a third, whatever. Right. 2/3
fractional
lower.
Percentage points
Exactly.
matter today. That's right. Yeah.
So
we rounded numbers in those days.
Yes. No.
Yeah.
Doesn't happen today. But that's okay. We're in a great rate environment, even with them ticking up a little bit here recently. So.
Yeah. Well, so to continue the story,
kind of what's next?
I bought the home, obviously, and I was unmarried at the time. So the next thing that happened was I decided to get married. I met someone, and that marriage decision led me naturally to the realization that I probably needed to have some life insurance. I had someone now in my life that I wanted to protect.
Yep.
So I met an agent, a life agent, and he recommended that I take a look at a cash value policy. And because I really trusted the advice of this individual and still do to this day, I've never regretted that decision. The premium payment on that policy seemed like a lot of money at the time. Today it doesn't. It was, I think, around $65 each month was the payment on that policy. And later on, I added to that coverage. And when I did, I was buying more cash value with my premium payments. Again, this is a way of forcing some savings. Today, I can much more easily afford to keep the life insurance that I want and need because the value has continued to build over time. Lots of small payments over many years, and that allows me today to pay premium payments that are much lower than they would be if I had tried to purchase that insurance later in my life. So doing that at a young age turned out to be a really, really good decision.
Pretty cool. Yeah, that's not even the sports package today. $65. You can't even get cable TV.
Right. For a lot of our listeners, that's probably not even enough for an evening out. It's a bottle of wine, possibly.
Yeah, exactly. So I haven't really heard you talk about investments yet, kind of traditional investments, stocks, bonds, mutual funds.
Sure. Yeah, that's a good segue. About the time I started making some headway in my career, two things started to happen for me, and I started making more money. And I started to really notice the effects of the taxes that I was paying. So I began to look around for a way to reduce what I was paying in tax. And a CPA friend recommended that I investigate this idea of a retirement plan. I didn't really know what that was at the time. And I started putting some money into this new thing called an IRA, an individual retirement account. And that was in the late 70s, and I think at the time the federal limit on IRA contributions was $1,500. That's all the government would let you put into a retirement savings plan, a personal one at that time. So honestly, my real motivation started off as a way of reducing my taxes.
Yeah.
I think a lot of our
There's
listeners
different motivators for different people, right?
That's right.
And particularly with self-employeds, that can be a big motivator.
Very much so, and I hope the listeners are starting to get the theme of this is many of the best things that happened, the best decisions I made were allowed for some unintended consequences. I made these decisions for reasons all of their own that made perfect sense at the time, but they weren't necessarily the reasons that are most important today. Where I am today is different because of those decisions, regardless of my motivation. So honestly, my real motivation was just reducing my tax, and I didn't really realize or understand the power of compounding, the power of compound interest. And I made some early mistakes. One mistake was I opened my first IRA really at a bank where they offered me a CD as the investment choice, and at that young an age, that was probably more conservative than I needed to be at the time. And I later made the mistake of trying to pick some individual stocks really before I knew what I was doing there, and I quickly learned some valuable lessons about individual stocks.
Did they go down too?
Sometimes they do, yes, yes. I remember one stock that I bought was in a local restaurant chain that I liked because I liked the food there, and that turned out to be a poor choice.
Got it.
Yeah. So it wasn't until a friend explained what a mutual fund was that I started to make some headway, Chris. I updated my IRA to a SEP IRA, and that allowed me some additional contribution limits, so I was able to put more money in the plan. More money could go in. Now, I'm still motivated more by the tax savings than I am understanding the investment growth opportunities. So still doing the right things sometimes, maybe for potentially a lesser important reason.
Yep.
I don't know if that makes any sense or not.
It makes perfect sense.
Yeah. So then a funny thing happened along the way. And this is where I hope the listeners start to appreciate how beginning to see the improvements in your balances. These are noticeable improvements over time. As those balances grew, I looked for more ways to set aside additional money, and my priorities shifted so that I started to really enjoy, and this may sound counterintuitive, but I enjoyed not spending some of this money because I saw that I could invest it and that it would make even more money.
Yeah. So really, wait a minute. In my mind here, you're really beginning to realize that this all happened before you really ever made your career choice as an advisor. You were learning these lessons along the way. Pretty cool.
Yeah, very definitely. And I don't know that it would be quite a long time in the future before I would realize all these things. But getting started early, buying my first home when I was young, purchasing that first life insurance policy when I was young. Stock, mutual funds.
Mutual fund, IRA.
Yes. All before I really understood
any of it.
That's right. Yeah. And sometimes, and I know my staff gets tired of hearing me talk about it this way, but I describe this approach as now I preach what I've already practiced. You've heard the expression, you practice what you preach. Well, I preach what I practiced.
You preach what you practice.
That's right. And I began those practices in some cases, not by accident, but let's say they were fortuitous decisions at the time. Yeah. Does that make sense?
Absolutely. And I honestly, we've just come up with the title of your first book, Preach What You Practice.
Or Fortuitous Decisions.
Well, either one. That's your second book.
Yeah. Well, you always tease me about using financial advisor vocabulary, so there's your vocabulary.
I know.
Word
I'll
for the
try
day.
to get him to talk normal language so we can follow him.
It's never going to happen.
It's just because you're so good, man.
Chris, it's just never going to happen. Yeah. So anyway, just to carry on, I kept adding to my portfolio and saving, and then something critically important happened. I realized that I could set some tangible goals about my personal wealth, and that occurred to me at around the age of 30. At around the age of 30, I decided that I could probably be a millionaire by the time I was 50, and so I started thinking like someone who plans to be a millionaire.
Cool.
The paradigm shift.
Did you realize your goal? Are you comfortable talking about that with us?
Well, yes and no. Yes and no. I
can pause the show.
Would you like to have a side conversation? Well, I have absolutely no reason to want any of our listeners to hear me talking about my personal financial circumstances as a way of bragging, because that's not what this is about for me. But I also don't think it makes much sense for anyone to get any real advice or listen too much to a financial professional that doesn't walk the walk.
That makes sense.
There are a lot of practitioners in the industry that are good talkers, but I try to set the right example for our clients by, what I do. And when I speak about any personal success I've had, it's really intended to provide an example what's possible for our clients and for ordinary people to accomplish, because that's who I am. I'm just an ordinary guy that luckily made some wise choices when and at the right time intervals to make a big difference in my life.
Absolutely.
So, the most important decisions that were made long ago, and you've heard me speak about this on the show, Chris. It's not that I knew very much at the time. I talk a lot about what's important, and knowing something is a lot less important, as it turns out, than doing something. So it was what I did that matters most.
Sure.
And so I'd like to just give a mathematical example if I could, because the math really works in your favor as an investor. And my favorite example is the compound interest example. It's the same math that allows $1,500 to compound or double to $3,000, that also allows $1.5 million to become $3 million. It's the same math. It's the same investment performance. It's the same amount of time required.
It's just a larger amount.
That's right.
Or a smaller amount.
It's the only way to gain that extra compounding period, which occurs later on down the road in life, is to gain one early on. So the sooner you start and the sooner you get that $1,500 that doubles into $3,000, then you assure yourself of one or two extra compounding periods later on in life, and that's when your wealth really grows.
That's when it gets exciting. So what else did you do that really mattered? Well,
so that's the best part. At around 40, and this is why I'm on the show today, I was presented with an opportunity to come into the industry and try my hand at helping other people to achieve some similar successes. And to be honest with you, Chris, and you've known me a long time, I really struggled with the idea at first. I felt underprepared at the time, and I was. But I had developed this belief system, and I had cultivated it, and I had this wealth of experience that came about as a result of working with my own advisors, the people that recommended my first home and financed my first mortgage and opened my first IRA, and those were all people that showed me the path, and then seeing for myself what could happen when a strategy comes together with a few of the right habits, and that's why I'm here today.
There you go. Awesome. We're going to take a quick break, and we're going to wrap up the last segment with Sandy's story here. So please stay tuned. We'll be right back. Hi, Chris Reshatar here with NFM Lending and host of Reshair Radio. If you are considering purchasing a home, you may wonder what your financing options are. We offer a variety of loan products to fit your situation, including conventional, FHA, VA, USDA, and jumbo loans. Here in the Carolinas, some of the most common loans are FHA and USDA. FHA loans are popular in low-income and first-time buyers due to their less stringent requirements. They also have low down payment requirements and tend to have a lower credit score requirement as well. USDA loans also allow low and moderate income households to purchase homes in an eligible rural area. Home buyers who do not qualify for a conventional loan may be able to purchase a home with USDA. If you're looking for platinum level service and open communication throughout the process, call me, Chris Reshatar, at 704-277-4463. That is 704-277-4463. LO NMLS license number 117266. Corporate NMLS license number 2893. Go to nfmlending.com for licensing information, and you can apply online at themortgagegenius.com. Welcome to Reshair Radio. I'm your show host, Chris Reshatar with NFM Lending. We've got here in the studio this morning with Sandy Solomon of AXA Advisors. We've got people waving from the streets. Super Bowl Sunday. Good to see all, folks. Sandy, we were really weaving your story and sort of how you got into financial advising and all the different kinds of things that you dabbled with. It sort of led you to the point where you thought, well, maybe I can be an advisor. You even said at one point you were almost uncomfortable, like, I don't know if I can do this, right? So, what about now? What's kind of different?
Well, thank you for asking that, Chris. That's a good question. It's very different now, and I'm very happy to say that our practice is thriving, and I just get tremendous satisfaction from helping our clients cultivate the right the right beliefs and cultivate the right behaviors. And if there's anything that differentiates us maybe a little bit from the industry as a whole is I do see myself as that behavior coach, as a wealth advisor, as a practitioner in the insurance industry, but more importantly as someone who helps people to adopt a belief system that supports their ultimate success. And in some ways, I hope if I was listening to the show that I would get the impression that I kind of backed into this, that I didn't start out in the beginning with a grand plan.
Right.
And I made a lot of reasonably good decisions along the way. Not everything turned out in my favor, obviously, and there have been periods of good fortune. There have been periods of setback. There have been periods where I've been happy with our progress and also frustrated. But today, really, what's different mostly is it's a scale thing. And what I mean by that is that the percentage amount of the income that my wife and I earn that we are able to save and invest has grown over the years. And it's grown slowly, but it's grown nevertheless. And, if you're successful, at some point what happens is you end up having money looking for places to go. I don't know if that resonates with the listeners or not. It may not with some, but eventually you do have what I now refer to as legitimate surplus. This is money that's not needed for living expenses. It's not really needed for lifestyle improvements. It's money that's either going to kind of...
What can we do with this?
Yes. Thank you.
What can we do with this money?
Yes. Are we going to spend this money or are we going to save and invest it? And one of the things that I speak incessantly about with our clients is this idea that most wealth building occurs when people save from their income. It doesn't occur because of some watershed moment. They don't receive an inheritance necessarily or win the lottery, but we build wealth by saving from our income. So
it's that behavioral pattern that you had talked about that you really started earlier than probably a lot of other people.
Yeah, that's right. And I didn't know that I was doing it at the time. It turned out that my knowledge came as a result of my behavior and not the other way around.
Right.
Okay.
Makes sense.
Yeah. So today I'm very fortunate. The firm that I represent sponsors a plan that I can invest in, a retirement plan. Plus they offer me opportunities to purchase company stock and stock options. And, we max out on all those opportunities. But I'd like to share with the listener one of the things that I do that I think is the most important thing. And it's something that I refer to as, I call it sweeping up.
Okay.
Sweeping up.
Sweeping up sounds kind of like a cleaning term.
Yes,
it's interesting.
Right before you move into your new home.
Right.
Yeah, you sweep up the old one. Right. So what sweeping up means to me...
Tell me what that is.
Yeah. So sweeping up is really possible today, Chris, because of the great online technologies that we have. And I hope a lot of our listeners are using the internet. They're probably banking online. And I remember when I used to receive a paycheck in the mail and I would have to endorse that check and drive down to the bank and write up a deposit slip. And, everything had to be done manually. And today, it's nothing like that. So this technology allows us to do something interesting, and that is that every pay period, again, I'm investing now from my income, every pay period I look over the bills and expenses that we have, and once that I pay those, what I then do is I sweep over whatever's left in that checking account, I sweep that money over into one of my investment accounts, and I call it putting the money over the wall or putting it through the one-way door. And I learned this little trick.
You flip it over and forget it.
That's what happens. That's right. It's mental accounting. And I learned this little trick by studying neuroeconomics, which we talk about in
neuroeconomics, folks.
That's right.
These big words keep coming back.
Right. I'm fascinated by this subject of behavioral finance because it's all about the decisions that people make.
Sure.
And how we are wired kind of at the DNA level to not necessarily make smart decisions. So this little mental accounting trick works really well. So now that money's on the other side of the wall, and like you said, it's very hard. I have to make a decision to bring it back if I want to spend it.
Sure.
Okay. So putting it over the wall means that I'm far less likely to go back for it. And once it's over the wall, it's psychologically far less likely that I won't hang on to that money. Yeah. When that money's in your checking account, and that's what I call permission to spend.
Right.
Yeah.
Is right there.
That's right. And once it goes over the wall, then that's permission to save.
Yeah. No, I mean, it's mental, but it's relatively simple. That sweeping concept is really about getting it out of that spend bucket and moving into a bucket that you're not likely to touch. But I think an element maybe you haven't spent a lot of time talking about that I'd like to add to is that when you start doing that consistently, you have a newfound energy in your life because that money starts to grow a little bit and get a little bit bigger. And maybe it's not growing because of compounding interest, but it's growing because you keep adding to it. And it's very interesting because I have an 18-year-old son who is college bound and, doing all the stuff. He's working, but he's literally started investing money at 18 years old. And he went to college and he's keeping track of the money. He's not touching that money. Yes, he's paying for some of his college and he's saving money, but he's already at 18 getting excited about that money he put over the wall, right? Because he had never really done that before, right? When you're 16 years old, most kids aren't saving, right? Mom and dad have a savings account for me and I'm excited to get to it when I can, right? But he started investing his own hard-earned dollars and then started to see that money get bigger and bigger and bigger. Now he's excited about what's over the wall.
That was what I hope you would, that point would get to. That point is now, I think sometimes people, when they first start a savings plan, they're subject to the belief that this is never really going to matter very much, that this seems like an awfully insignificant amount of money that's going into my account. What they don't understand is the excitement that builds as time goes on, and that excitement reinforces the habit.
The behavior, absolutely.
That's right. And it rewards you for the discipline. The discipline of doing without something today so that you can more easily afford something nicer tomorrow.
Yep.
And that's just the best habit. It's self-reinforcing and self-completing. And so what I find is that the hardest part is getting started.
You're right.
Yeah.
Absolutely. Getting the behavior started. Just like with anything, any good habit, you have to do a minimum of 20 times before it becomes a habit, by the way. That's
right.
Another statistic.
So you sweep up 20 times.
Sweep up 20 times. We're pulling that from air. But I think that is a stat, something like that. But so we've got a few more minutes left, Sandy. I'd like to just kind of sort of dovetail off of what you sort of brought up, and that is one of the first sort of decisions you made financially in your life was purchasing a home, right? And I have to say, I myself graduated from my college degree, got my college degree, and then 6 or 12 months later, my wife and I, we bought our first home right away, 22 or 23 years old. And at that point, there was a mental shift, right? It was, okay, we got a small home, wasn't a big mortgage. It was a little town home up in Bucks County, Pennsylvania, where I'm from. And I mean, I was literally putting an extra $200 on the principal balance every month because I was, all motivated about paying that mortgage off, and young and innocent and didn't have any kids yet. But it changed me. It changed who I was, because now I had an opportunity to have an asset that was going to grow, and that is building that equity inside of my mortgage payment every month and paying a little bit of extra. And it sort of started that process. And I think our listeners, as you understand, as a licensed loan officer with NFM Lending, that's really most people's biggest investment is their home. And it's their best way to create wealth. If they don't make a lot of money, maybe they just literally make $14 an hour and they're a forklift, operator at Home Depot. That's still a living. And we have a lot of people in America that just live day-to-day regular jobs. But buying a home can really change your long-term trajectory So if you're interested in that process, like I was when I was 22, 23 years old, I want you to reach out to myself, my team at NFM Lending, and let me help you take that first step. And we may have other people that are listening to our show that may have a little more income in their, or jingle in their pocket, or income to spend, that may be a better fit to start with Sandy and say, you know, I need a good advisor like Sandy. I need somebody that's tried lots of different investing and sort of come to a spot where you've sort of realized a great career in helping people achieve wealth. So anyway, let me give you my number. My number is 704-277-4463. That's 704-277-4463. I'd love anyone that wants to kind of get that process of buying a home and really being able to create some wealth in your life started. You can also find me on the web at themortgagegenius.com. That's 3 words, themortgagegenius.com. If you have any questions, please let me know. And Sandy, I'd love for you to just have our listeners, give your information to our listeners too. If they need your services, they can reach out to you.
Sure. And do we have another minute, Chris?